All right, let's jump right in. Today, we're talking about something huge that's sending shockwaves across the entire global economy. The US dollar is in a free fall. So, what on earth is going on? Why is it happening so fast? And what does it actually mean for everyone? Let's unpack it.
So let's get right down to it. We're not talking about some slow, gentle decline here. Oh no, this is a rapid, headline-making nosedive that has caught a lot of people completely off guard.
And what's really wild is just how fast this has all happened. I mean, look at this. In just 15 days, the US dollar index has tanked, hitting 95.9. That's a 4-year low. It's kind of like watching a blue chip stock suddenly lose a huge chunk of its value in just a couple of weeks. It's pretty dramatic. Okay, so what does that 95.9 number actually mean? Well, the easiest way to think about the US dollar index is like the dollar's report card. It's graded against other big currencies like the euro and the yen. And a score under 100, well, that's basically a sign that things are not going well. It's a clear signal of weakness. So, naturally, when you see a drop this sharp and this fast, it begs a really big question. Is the dollar's reign as the king of global currencies actually in danger? And the thing is, what we're seeing isn't just some momentary blip on the radar. Nope, this is a symptom of something much, much bigger. A huge structural shift that's happening in the global economy. You know, for decades, the US dollar has basically been the world's savings account. Countries all over the globe held their reserves in dollars. But that's changing. The dollar's piece of the pie has shrunk to 58%, which is its lowest point since the year 2000. And you have to understand, this isn't happening by accident. Central banks around the world are making a very conscious, very deliberate decision to hold fewer dollars. In fact, they're holding the lowest percentage in 26 years. They are actively shopping for other options. So, why is this all happening right now? This isn't just random. It's more like a perfect storm. There are 4 really powerful forces that are all coming together at once, pushing this massive shift away from the dollar. We can pretty much break it down into these 4 key areas. You've got a staggering amount of debt, you've got the central bank's own policies, there's a ton of global political tension, and frankly, there are just other strong options out there now. First up, the debt. I mean, just let this number sink in. $38 trillion. The US national debt has ballooned to a point where it's now bigger than the entire US economy. A debt that big creates a huge vulnerability, and you can bet other countries are noticing. Second, you've got the Federal Reserve, the U.S. central bank. The word on the street is that they're getting ready to cut interest rates. Now, what does that do? It basically means more dollars get pumped into the system. And it's Econ 101, right? When the supply of something goes up, its value goes down. Third, you can't ignore the politics. See, investors hate uncertainty more than anything else. And with all the ongoing trade disputes and unpredictable policy moves, that rock-solid trust in the stability of the U.S. is, well, it's starting to wear thin. And that's making people look for safer places to park their cash. And finally, the dollar just isn't the only game in town anymore. For a long time it was, but now you have other major currencies like the euro, the Japanese yen, and the Australian dollar that are getting stronger, and they're becoming very real, very viable alternatives. This isn't just chatter among traders and on Wall Street anymore. This has gotten so serious that one of the most powerful financial institutions on the planet, the International Monetary Fund, has started to publicly sound the alarm. And I mean, listen to this. This is a direct quote from the head of the IMF, Kristalina Georgieva. She is sending a crystal clear message to the entire world. Being this dependent on the US dollar is a major risk. And it's time to start working on an exit strategy. And get this, the IMF isn't just talking. They are actively running computer simulations for what they call a massive shift. They're wargaming a scenario where countries start dumping their dollar assets all at once. They're literally preparing for a situation that, not too long ago, most people would have called unthinkable. And this isn't just a simulation. It's not a drill. It's happening right now. Major economies like Brazil, India, and China are already making big moves. They're selling off their US treasuries, they're stocking up on gold, and they're pushing to do business in their own currencies, completely bypassing the dollar. So when you put all of this together, what are the real-world consequences? Well, we could be watching the birth of a brand new global financial order, and in any new order, there are always winners and losers. You can see that dynamic playing out so clearly here.
It's like a seesaw, right? As the US dollar falls, other big currencies, the euro, the yen, the Australian dollar, are rising. They're all benefiting from this global pivot away from the dollar.
So, when investors start losing faith in the dollar as the ultimate safe haven for their money, where do they go? Well, they're turning to the oldest safe haven in the book, gold. People are flocking to gold, and that demand is pushing its price to record highs.
And all of this brings us to the final, absolutely critical question. For nearly a century, for pretty much our entire lives, the global economy has been built on the foundation of the US dollar. What happens if that foundation actually starts to crumble? The answer to that could reshape our world in ways we are only just beginning to imagine.